Hello everyone, myself Vaibhav. In last couple of sessions, we are seeing that the dollar index is back in demand, and there is newfound resurgence in the dollar index, which is propelling on the higher side. If we consider the today's market moves, we didn't really see fresh buying in the dollar index. Rather, it has kind of corrected to some extent, but I feel that now the trajectory is changing, and after due consolidation, the likelihood is emerging that we might see the dollar index again going back above the 94 levels. And that's why today's session of market movers is titled as the resurgent dollar index. If we consider the trading context for the day, we have these retail sales figures which were released just a while back, and the US retail sales have been quite strong for the month of September, and these are better than the expectations. And if we see the reading, the month on month rise is at 1.5%, which is almost double the estimated number, and in terms of year on year the growth is phenomenal at 5.4. And you can say that people are willing to go out and spend, and that's good for the US economy. Just in a while, we are also scheduled to get the industrial production data, and here the industrial production is also expected to rise, and the growth in terms of month on month of around 0.5% is expected, and we are likely to see this expansion phase likely to last unless and until we see the coronavirus resurgence putting the infections on the higher level, and then it might impact the economy adversely. But as of now, the things are holding well, and let's see how this pandemic situation evolves. Later in the day, we are also scheduled to get the United States Michigan Consumer Survey data, and here the focus will be on the inflation expectations, which are likely to remain unchanged around 2.6%. And if we consider the other survey numbers, the current conditions, as well as the consumer sentiments, we might see slight improvement on these counts, and also the consumer expectations are also likely to go up, though not much growth is expected. Still, any improvement these days is worthwhile, and it might help the dollar to some extent. Now let's shift our attention to the technical outlook. Here we will first cover the dollar index, and then we will consider the outlook for gold as well. Let's start with the dollar index technical outlook. This is the daily time frame chart, and here the daily time frame chart, you can see that for the dollar index, the 93 level has been acting as the support for a while now. This is the second time around where the dollar index is finding buying support around these levels. In the September, also mid September, we saw this consolidation phase, and then this move on the higher side, which had eventually taken the dollar index pretty close to the 95, and after that this correction again brought it back to the 93, and now for last couple of sessions we are seeing fresh resurgence, and this is the reason why I feel that we might see this newfound upward momentum in the dollar index is likely to last, and we might see in near future it crossing above 94, and eventually it might try even to cross the prior swing high. So moving on to the 4 hourly chart, we have the immediate support zone coming into play around 93.5. We have this central pivot point of this month's pivot point series, and as the formation in the short term time frame is of higher highs and higher lows, we can bet on this support area to provide some buying momentum in the dollar index if the dollar index falls to those levels. Right now, it is around 10 to 15 pips away from the desired level, but this is the marker, this is the area of interest for us to watch out for in next couple of sessions. And if you consider the regression curve is still sharply bent on the lower side, as we had this steep fall, steep decline, starting closer to 94.8 and going all the way to 93. But as the things stand, and as I say, we are seeing fresh buying momentum closer to these prior swing lows, and this momentum is likely to last. And to figure out the optimum entry and exit levels, we have these confluence zone of 50, 100 and 200 SMAs coming together close to 93.5, and as long as the price action is above or in the vicinity of 200, we can be fairly confident of revival in the dollar index. And if we consider the formation here, we have these 50 SMA above the 200 SMA. That means we have the golden cross in our favor, and on the lower side, the 100 SMA is also there. And not to forget these immediate swing low, which is there around 93.30. So here these are the levels I think which are likely to provide near-term support to the dollar index, and that's why I am fairly confident of dollar index holding closer to the 93.5 zone. But as of now, it is in the correction phase. So let's see if it is able to hold above this area or not. Next couple of hours are crucial. If we see no further correction, and if the dollar index slowly and steadily moves towards these 93.5 and holds around those levels, and if at least for a couple of hours it should consolidate without any further move on the downside, then I think we should go for any buy trading opportunity, and eventually in due course of time we are also expecting it to try to again regain its immediate swing high or even move past this 93.9 level and get above the 94. So here target the price zone between these 200 and 100 SMA, and it will be good risk reward ratio also, as I said, as we don't really need to keep a wide stop loss. I think the stop loss just little below this immediate swing low, the stop loss anywhere close to 93.20 should be good enough for this trade. And if our buy entry is anywhere in the price band of 93.5 to 93.6, I think we will be able to cover this stop loss of around 30 to 40 pips with the possible target price of around 70 to 80 pips on the higher side. If we are going for the buy entry in the vicinity of 93.5, I think we can target the price levels around 94.3 to 94.4 on the higher side at the minimum to cover the risk also, and that will give us the risk reward ratio of 1 is to 2. Now moving on to the gold. Gold has been in a topsy-turvy momentum for last couple of sessions. In yesterday's session only, we were talking about the gold moving towards 1850. But now the situation has really changed, and because of that, I have also changed my mind, and the outlook seems to have changed. And if any of you had gone in for yesterday's trade, I think it's time to square it off, or you might have already hit the stop loss. As I checked, the stop loss was not really hit as of now. It is still below the stop loss level. But in the changing circumstances, I feel that it will be better if we change our positioning and see how things shape up in today's session. And today's is a Friday session, so we have not much time, only a couple of hours left, and then we will be on the weekend, and till Monday there won't be any action in the market. If you consider the daily time frame chart here, the dollar index, the gold has rebounded after getting close to the 38.2% Fibonacci retracement, and last almost 2 to 3 weeks now it has been pretty range bound and trading in a very narrow range. On the lower side, it is finding some buying support closer to the 1880 USD per ounce, and it has been consolidating closer to these USD 1900 levels for quite a while now. And we have these central pivot point of this month's pivot point series, which is there just closer to the current consolidation phase, and we don't really have any clear cut marker or any significant price move above this to just say that the upward move is highly probable, but I think the circumstances are changing and the bearish outlook is now receding, and because of that, we have to get ready for any eventual move on the higher side. But we need to be watchful as of now. We indeed have this regression curve now pointed on the upside, and if we consider this immediate formation, the swing highs and swing lows, then the formation is also of higher highs and higher lows, and because of that also I feel that the gold is likely to move on the higher side closer to its immediate swing high or even beyond that. So if we were to rely on this confluence zone of 50, 100 and 200 SMA, which is there around 1900 USD per ounce, I think we will have to go for the buy trade anywhere closer to these 200 SMA, while keeping the stop loss just little below these immediate swing low, which is there around USD 1890 per ounce. So for a risk of around 15 points or 15 USD per ounce, we will be in a position to target almost 30 USD per ounce on the higher side, as we are betting on the possibility of gold again climbing on the higher side closer to this immediate swing high, which is there around USD 1935. So with that, we will be getting the risk reward ratio of 1 is to 2, and as I said, the technical factors are also pointing to the changing circumstances. So let's see how things shape up in the remaining hours of today's session, and I think even if we don't really go for the fresh trade in today's session, on the Monday after the start of Monday's session, we are likely to find good opportunities to get the price closer to our desired entry area, and then we will be in a position to go for the risk reward ratio of 1 is to 2 as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Goodbye.